Happy New Year 2023. As you can see, if you're watching, I've got two empty chairs. I'm the first guy back, so you're going to have to deal with me, Mike, as the host this week. This week, I'm hosting Ryan Bloomfield and Matt Barrell, two specialist estate agents working in the Reading market. And they're going to talk to me about the resilience of Reading in economic downturns, which is important going into this year. So I'm going to go deep into why people would or should or shouldn't invest in the town of Reading in the southeast. It's a really important economic centre which has seen huge amounts of central investment over previous years, and it's now on the tube map. So how's that going to fare as the news media gives us the negativities of recession in 2023? Are we going to break the mold? Are we going to follow a slide? Where are we going to go? Only Matt and Ryan can tell us. I can't wait to get them on. So without further ado, I'll introduce the guys. I'm here alone today. Ian's taken flight to warmer climes for the Christmas holidays and not quite come back. So I'm joined today by our Reading specialists, Ryan and Matt, to talk everything Reading and with perfect alliteration. Matt assures me he wants to talk about resilience in Reading today. So it's a new year. People obviously make new decisions over the Christmas break to invest, divest, change, sell, buy, do anything new in 2023 with their resolutions. And we're going to talk about Reading today with you two guys. Now, Reading is an ever-changing market. It's probably one of the fastest growing, fastest moving towns in the UK, let alone the south and east of England. So we're moving into a year where recession is expected. I think it's an incredibly crazy economy where certain people are doing very well and other people are really struggling at the same time. So, Matt, your topic, your alliteration, why is Reading going to be resilient in 2023?
So resilient Reading is I think that's going to be my phrase for the rest of the year.
I like
see
it.
myself saying this.
Works well.
We've come out of the quarter at the end of last year with lots of doom and gloom, and I think everyone's asking what's going to happen with the property market. People have been asking me that since I started back in the new year. I don't know if it's the same for you.
For me, yeah.
And I just think Reading, the fundamentals for Reading, I've said it before, are so strong that Reading it's your safe bet. We haven't seen the crazy growth that the Wales and the more rural places have seen during COVID. So I don't think we're going to see the same downturn as perhaps some of the more vulnerable places in the country.
Yeah, so 2008, the last time house prices took a real thumping drop. You could argue 2015 as well. There was quite a correction and Reading probably felt that more than any other town. And from my personal opinion, I thought it's because there's less people anchored in the town and a lot more buy to let. Why would it be different this time round?
So I'll go with that one.
Go ahead.
I think for Reading as an entity, you've got like your UK market and you see all the doom and gloom headlines, and then you've got your regional markets. Now, Reading as a town is in its own right a regional market because you've got so many little micro markets within it as well. The connections to London, obviously Crossrail finally opened last year. So there's people that we've talked about Crossrail. I'm sure you've done podcasts on that.
I don't think podcasts were a thing when Crossrail was announced, but it is open.
But the connections, frequently to London and actually getting there is so easy. And there's a lot of companies, obviously, over the last few years have moved out to places like Reading and the Thames Valley because it's so convenient. They pay a lot less rent than they do in central London, but their staff can still get into meetings. It still works for them. But we've never seen the demand drop, even in that 2015, 2016 market. I remember 2016 when the stamp duty changed for second homes and investors. They were like 30% of our buyers at the time. And suddenly there was a lot less sales happening, but the market never dropped. It stayed sort of very stable. And then we saw a slight drop in 2019 before the rises over the last few years, the pandemic boom years. But overall, people still want to buy there. It's still good for connections. There's a good infrastructure there with the trains, the buses, shopping, whatever you need, it's on your doorstep. Got the hospital, got the university. There's always going to be an appetite for people to live within the Reading area. So that's why it's going to be resilient in any downturn. There's still going to be people that want to live here.
Yeah, I think being on the tube map officially changes things for a town because you become part of outer London. And as we know, London's probably got the strongest real estate market in the world, bar none.
Yeah.
So you get that wave out of, well, can you afford to live in central London? No. Can you afford to live in West London? No. Can you afford, or do you want to live in the M25 districts west of London? Potentially no, for one of the two reasons. But then you look at Maidenhead and Reading, and suddenly, comparatively, it's cheap, right? And that, like you said, it's the same for businesses. You can get a lot more space with all the mod cons, with the parking that you wouldn't get in central London. It's closer, if not for Heathrow Airport, than central London, and more convenient for people coming in and out for meetings. So geographically, it's blessed in that place.
Yeah,
and as you say, there's different markets in the town. We're not just talking city centre stuff here.
And I think Heathrow doesn't get enough attention when we're talking about Reading. I think Crossrail's mentioned all the time, but Heathrow, and for those big businesses with international connections, and Shinfield Studios as well, which is flying up, actually. I've just driven past it to come here.
A new multi-storey car park appeared last week,
didn't it? Just like that in a day. It's just, but no, Heathrow. I mean, when I'm flying internationally, I land, turn my phone on, text my brother, say we've just landed. Half an hour it takes him to get from Reading to the gate.
Probably quicker than you getting your bags.
Which is exactly the amount of time it takes.
Yeah.
Someone's doing okay flying out of Heathrow. Someone's doing okay for themselves.
That's just your long haul holidays, isn't it?
Yeah. Once upon a time in 2016.
Yeah. But it is. I think the connections around are so good. And I've touched on that infrastructure, but the suburbs of Reading as well. You've got we talk about the central Reading market there for a business, but some places are really nice to live, like Caversham, which is still Reading, just over the river. Completely different marketplace, completely different to West Reading, where I'm based, and South Reading, when you are, and even going into Woodley, twice. Like the whole place changes. It's such a big geographical area, so it attracts so many different types of buyers.
Okay, so what is changing in Reading? There's masses and masses of development, and one thing that always piques my attention is if there is central investment, whether it's coming from the council or coming from private equity, if you can see hundreds of millions of pounds being poured into a town, you need to follow that money, because as Ian and I always say, these companies have got millions and millions of pounds to invest in research and you don't. So follow the research. There's a couple of thousand flats being built on Station Hill, along with hundreds of thousands of square feet of commercial property. Hammerson, who own the Oracle, have announced plans to bulldoze one of the old department stores and build 450 flats in the middle of the Oracle for rent. How's that going to affect the market?
I think it's a sign that the rental demand is there, and it's going to affect the market, because we know those rental properties are needed, hence why those companies are building all of those flats. I don't know how recently you've dabbled in lettings, but I know from my conversations their lettings demand is there, and I can fairly safely assume those flats are going to get gobbled up almost immediately.
Yeah, absolutely. Well, like you say, if the research is there, if the demand's there, these people aren't going to be building it on a hope and a prayer that there's demand for it. The last build to rent building that went up, I think they called it Swan Heights, 25 stories, fully occupied in weeks. And from my point of view, as someone who works in the lettings industry, does that affect the prices of a standard buy-to-let that Mr. and Mrs. Jones would like to own down the road? No, it's a totally different product, because these buildings are catering for short-term renters and premium markets. They're charging 25% plus over market value, because they have co-working centres, they have theatres, cinemas, they have all sorts of different facilities. It's not what everybody wants. They're obviously looking for a prime market. We were talking off camera, what happens when a developer builds 500 houses or 500 flats in an area? Ryan, explain what happens when a developer does that.
Well, new builds naturally come with a price tag attached to them. You pay a premium for something brand spanking new. It's like buying a brand new car. You pay the top dollar for it. But what that does do is the other properties almost grab on the tailcoats of those prices rising, and prices do go up. People see a new build selling for £350,000, for example, and they've got maybe a bigger, better property, slightly older, granted, but it's a detached. That one's a terraced. Yours is going to be worth more than that. And it does. Your suddenly have gone from 325 to 400 just because new builds are there and people are relating that directly. So it has a massive impact on the area. Any new build that comes out will inevitably enhance the prices of the entire area. So it's not a bad thing. I know a lot of people object to new build estates going up on their back garden, that sort of thing. But actually, in the long run, it's going to help property values overall, and it's only going to increase the numbers for everyone. So it's a good thing.
There's a set of ironies that are quite often associated with new build houses, because they're either built on brownfield sites, old factories, old office buildings, that kind of thing, which is a great reuse of land, or they're built on greenfield sites, which are previously unused green fields, which is a shame. But what I've seen where I live, just outside of Reading, is recently built on top of an old private golf course, which there was a lot of protests about building on top of a golf course. But then a whole new country park opened. Now, I haven't played golf in years. I don't have the time, but I do have the time to take the dog for a walk in the country park. So it's actually opened up more green space for me as an individual than was previously there before. So it can have its benefits in a lot of terms. And as you say, you tend to carry the coattails of what the developer's selling for in time. And where the red herring is, where the government say build more houses, house prices will come down. Well, they're being built by private developers, so private developers are going to maximize their returns, right? They're never going to be selling for the public benefit. They sell for their own benefit. So let's cover something that has caused a lot of heartache, a lot of tears, a lot of problems for private individuals and for landlords: cladding.
Cladding.
It's not come up that often recently, is it? I know there's been a lot going on behind the scenes, and there's so many campaigns for people that are effectively prisoners in their own property. They can't sell, they can't remortgage. So I think news that broke this week about a few mainstream lenders now opening up conversations to lend on those types of properties it must be a good thing, because it's staggering that it's 5.5 coming up 6 years since the Grenfell Tower disaster, and the fact that they're still talking about it now and things haven't been rectified. It's pretty bad, to be fair, isn't it?
Yeah, it's shocking, because everybody knows what needs to happen to those buildings, but everybody's very quick to have the slopey shoulders to look at somebody else to look for the resolution from it. So as of today, second week in January, where are we if you live in a Reading town centre, or you own a buy-to-let in a Reading town centre building that was built pre 2015 with cladding?
Do we do that, Matt, or shall I?
So the articles we've been seeing have come about from new RICS guidance, which makes it which gives valuers more leeway to take a view on buildings with cladding, right? Which means that some buildings which were just in a spiral of not being able to get mortgaged, there's now more clarity there from valuers who work for the mortgage companies. So I feel very sorry for leaseholders, because I think we're on a path to leasehold becoming better for the leaseholders. I still don't think we are anywhere close to there, but I think this is a step in the right direction.
Yeah. I think the guidance released, though, there's a few main lenders, HSBC, Santander, for example, two of the biggest lenders in the country, have said that they will lend as long as there's signs that if it's still got cladding, that is going to be removed and there's works in place for that, or it's going to be underneath the government scheme where they'll remove it themselves or pay for it to be removed. As long as those are hit, I'm sure there'll be a few more tick boxes to go through. But it shows it's a massive step in the right direction, where for the last few years, people haven't had any idea of when they're going to be able to get out of this hell, basically.
Yeah, I guess that's the telling question. Is it a false dawn, or is it actual progress?
It might just be the case, obviously, until the full guidance is launched. It might just be a case of lenders just saving face and say, "Oh, we'll lend on them now, but you've got to do this," knowing full well that those things can't be done for them. So there's a lot of buildings that have had the cladding removed or had things changed to prove it's safe, and they'll be fine. But there will be many more property types that haven't had any work done or haven't come to an agreement where they can get it done. So all well and good lenders saying they'll lend on them, but if you can't, if the cladding hasn't been removed, it's irrelevant. It's still the same position. So I think it's a step in the right direction.
Yeah.
Of course, people are still talking about it. It was on one of the big radio stations earlier in this week. They were talking about it, so that's good to get it back in the forefront of people's minds. But still, a long way to go by the sounds of things.
Yeah. So it's the banks showing they're willing to do something on the basis that someone else meets them halfway.
Yeah.
Is a kind of fair summary of where that is. So at least one side of the feuding parties is willing to take a step forward and say, look, we'll lend on these if you show that some progress is being made, which, hey, it puts the ball in the court of the block managers and the freeholders of those buildings to put the wheels in motion.
I think that's
been really hard.
It has been the issue though, isn't it? No one wanted to put their hand on and say, we'll deal with it. It's been lenders blamed, government blamed, block managers blamed. Yeah, but no one's taken any accountability and dealt with it. And that's where it's been. It's just a constant merry-go-round of passing the buck, pointing the finger, and nothing's been done.
Yeah.
And unfortunately, it's the residents that are in these apartments. They're the only ones suffering. The quicker it gets sorted, the better for everyone.
So let's look forward. We're at the start of 2023. Everyone makes these resolutions and predictions. We will hold you to this because it's on camera.
Please
and it's
do,
on video.
Be online.
We're back at the
see.
first podcast of 2024.
Absolutely.
And
We'll play back. Where's Reading heading? That's even better than Matt's. Where's Reading heading?
Yeah.
From a marketplace in 2023. If you've got a buy-to-let investor, whether they be first time or 15th time, where are you pointing them? What's going to happen? Where's your smart money going? All of those questions wrapped up into one.
So as an investor, you're naturally going to be looking for your margin of safety and for the good investments, of course. You're not going to buy when the market's on fire like it was last year. Have you noticed more buy-to-let investors in your inbox?
There's been a few. Yeah, definitely a few.
Yeah.
Whereas the last 2 years, I haven't seen an investor buy a new property through me, certainly in the last 2 years. But already I've had more inquiries in the first 2 weeks of January for investment properties than previous 2 years, I would say. So it's exciting for them.
So I think to answer your question, you're still looking at your central Reading apartments, I would say. I've said it before that the price spikes we saw up to 2016, some properties haven't moved an awfully long way off of there, and you're now getting maybe £1,300 in rent when in 2016 you'd be getting £900 of rent. So obviously there's a load of factors to consider there, but just on napkin maths, that's where I'd be looking to invest. Adding
to that as well, I still do think some of the slightly out of the centre of Reading, the outer parts, whether it be South Reading, West Reading, terraced houses, semi-detached homes, there's a market for those as well. And obviously buying freehold, you've got less money going out with service charges. You don't have to worry about leases, etc. So they're always good sound investments for a long term. If you're going to have it, if you want to buy a property now and sell it in 2 years and make money, it's probably not the right time to buy. But like everything, we see the market trends over 10 to 15 year cycles. Your property will be worth significantly more in 10 or 15 years time. So if you've got that money, whether it's for retirement or whatever it may be, and you want to invest in a family home, it's a good place to do it. It's a good place to do it. And Reading's we can see the infrastructure going in, the building that's going up. Just have to look around Shinfield and South Reading, the amount of housing estates going up. Reading is becoming a big place. It will be a city before too long.
Almost in time for Crossrail.
We said that. They said that when I started in the agency in 2008. Reading will be a city soon, but it will, and that's going to bring its own merits as well. So there's no such thing as a safe haven with property investment, but for long term, I couldn't think of anything more safer in the UK than the Reading property market.
And also the the type of jobs which Reading has, what Reading's known as what's the Silicon Valley of the UK, right? Tech, I think we can all agree, tech is the future. So that's all going on in Reading.
Yeah.
Yeah, the big international companies. I was working 2008 in Reading when the economy crashed, and yes, Reading took a big hit at the time. But what I found, the actual individuals, anyone who was made redundant, just walked away with a redundancy package and walked next door into the next either IT, engineering, or oil and gas firm and picked up a higher wage. So it was almost this is genuinely what I saw at a certain level was, yeah, I got made redundant last week, picked up a check, and then walked into a better job, which I found phenomenal, and why I was always confident. And I bought 2 properties in Reading in 2008-9 because it was like, well, if that's what I'm seeing, realistically, on a bigger scale, there is no problem, and this will bounce back faster than it went down because of that single situation. And we're in a place at the moment where I think a lot of people who run businesses are walking on eggshells a little bit because they're afraid to say that they're doing well, because you put yourself out there to be shot down a little bit. But
especially after the COVID year,
the small to medium sized businesses that I speak to, and I spoke to someone this morning who works in banking and in tech, and he just said, I've come back from the 1st of January. I've never had so many orders. I've never had so many clients. I've never had so much money being thrown at me. Our office is next door to a company who fits out office space, which we would imagine in a recession, he's going to have a tough time. And he was in his office yesterday at 4:30 a.m. because he cannot catch up with the amount of orders and the amount of work that he's got going on in fitting out offices, which says to me that, yeah, there's a lot of people struggling out there, and there's a lot of people who aren't getting a fair go or a fair amount of pay rise to match inflation. But Ian and I went to see Daniel Priestley a few weeks ago, who's well worth a listen if you run a business. And they defined inflation, and I've never heard it said this way, even though I studied economics. Inflation is there, and inflation by definition is costs rising because there's a shortage of goods and services. And there's a lot of money going around. There's so much money that it can't be spent on the goods and services because there's a shortage. It pushes prices up. So we're in an economy where there's loads of money. So where's the fear?
Yeah. It's a really, really well constructed point there, actually, because normally if there's money, that's when people want to upsize. If you've got money in the back pocket, you want to enhance your life. And that's normally, whether it be a new car, whatever, new house is always a natural progression for people. And same for investment. Even if you're renting a 1-bed flat and suddenly you get a massive pay rise and you can't quite buy, but you want a bigger space, you're going to want to look to move to a bigger rental property. So yeah, it's exactly that. It's a great point.
So gents, thanks for joining me. If you're more interested in the Reading market specifically, well worth a follow on social media, Matt Barrell and Ryan as well. And they also produce their own podcast, a little bit off track, part property, part Reading, part lifestyle, The Living Room on Spotify, which is well worth a follow, chaps. A little plug for you guys.
Thanks, Mike. Appreciate that. Yeah, on Spotify and soon to be on other platforms as well, as of about 10 minutes ago.
That's the Living Room Chat podcast.
The Living Room Chat. It's well worth a follow. And if you want to get involved with the guys, they'd love to have your feedback on what they're doing. And if you ever wanted to be a guest on the podcast, if you're Reading based, then they'd love to hear from you as well. So again, Ryan Bloomfield and Matt Barrell, thanks for joining me.
Thanks, Mike.
Okay, thanks so much, Mike.
So again, thanks to Matt and Ryan for joining me. I hope you found it a really interesting chat and their reasoning behind why Reading will show a resilience in the market if things turn down this time round, which frankly, the way interest rates for mortgages are fighting against interest rates from the Bank of England, I can't see too many downturns in the local area. So that's my thoughts on it. That's Matt and Ryan. If you want to catch up with them, they're on their socials. We'll put that on the episode description, and also check them out on the Living Room podcast. Thanks, and until next week, we'll see you then.